All right, thank you for tuning in on AWANI. Right now, we'll be discussing the key trends and also challenges in Malaysia's property, reflecting last year, 2024. And we also want to look at this year, 2025, looking ahead for this year. So we have the right authority to discuss on this. Joining me right now on the line is Sr Sulaiman Saheh, the Director of Research at Rahim & Co International, Sdn Bhd. Good morning, Assalamualaikum.
Good morning, Assalamualaikum. Nice to be back here today.
Amazing, amazing. All right. To recap, like I mentioned earlier, firstly, Sulaiman, 2024 has been a dynamic year for the property market. Can you actually show or highlight the key trends and also factors that influence the market's performance this past year as a whole? Like, were there any unexpected challenges or opportunities that stood out for you?
The property market, that is, performed rather well. Actually, it is actually one of the best performing years if we were to look into the history for the past 20 years. It actually grew and it grew even more compared to 2023's growth. But of course, it is not as high in terms of percentage growth compared to 2022 from 21 because of the pandemic effect. So because of that low base effect, if we were to just ignore that for a while, just comparatively where the market is actually is right now, the growth looks to be resilient. It has actually grown, and this time around, the growth in terms of property market transactions as an indicator of activity, it grew across every core segments in the market, be it residential, commercial, industrial, even development lands and agricultural properties as well. So the market has actually grown very, very healthily for the first 9 months. The official data has actually recorded above 6% growth in terms of number of transactions, and the total of transactions value, all the cumulative value of transactions actually grew even more at 14%. So the market looks to be going very well in terms of statistically speaking, but concerns in the market is still there, is still prevalent. You can see buyers, the sentiment amongst buyers is actually still very cautious. There's a lot of concerns in terms of the geopolitical uncertainties and especially with the coming online with some of the subsidy rationalization that is expected this year. So the numbers, one side is actually saying quite well, but buyers' sentiment is actually rather mixed. But commercial, in terms of the businesses and whatnot, the index, MIER's index of business conditions index, have actually improved to above 100 points, which is actually showing that the confidence is there. The confidence has actually come back, and now it's how do we're looking to be having hopefully another good year in 2025. Be it more gradual, but it will be another year to look forward to.
Okay, so basically you can recap that it has been doing well and has been growing positively and also healthily. But I have a curiosity where the various economic policies implemented in 2024, such as the changes in interest rates and also government incentives, how have these policies impacted the property market, in your opinion? And do you think these measures have been effective in stabilizing or stimulating the market as a whole?
The government have been accommodative for the growth of the nation. That's the hands down. But the focus that the government has actually put more focus on is actually growing on the fundamentals of the economy in terms of income levels, in terms of employment generation and investments. The direct property incentives or programs, it has been around. But I would say that it is pretty much similar to the one that we have actually had all this while. It is still important. It is very important, especially for the affordable housing schemes, incentives for first-time home buyers, iMiliki program, the credit guarantee scheme for eligible buyers. Those are actually important, but in terms of spurring or making sure that the fundamentals of demand continues to grow even further, we need to focus on some of the soft infrastructure. I think that's where the focus on the economy as a whole, as well as the income level and the investors' confidence in setting up new businesses in the country. How do we make sure that the office market or the retail market as a commercial hub continues to be strong? These are the overall support that needs to continue to make sure that we remain relevant and competitive regionally.
But however, Sulaiman, there's a anticipations that shows that there will be a slower global economic growth in 2025 that will, I guess, will impact the demand for high-end, also mid-range residential properties in Malaysia. And what can you say about that?
That's where we appreciate no two properties are exactly the same, at least from location. You can't have two properties occupying the same space. But the market, how it behaves, is very much localized to the specific areas. With the global economic trajectory, which is still stable, it is still moving forward, but we do expect there's still continued challenges globally in terms of on the economic front. But Malaysia's projection is still to continue next year in terms of growth. So we expect things to be still stable. The growth is going to be more gradual amidst continually cautious sentiment amongst buyers. But if you look at the question on residential properties, whether it's the high-end properties and the mass market, this is where we can see a differentiation between the two segments, if you like. The mass market, where the demand drivers are predominantly domestic purchases or local Malaysian buyers, especially for the owner occupiers or actually buying for their own consumption. Those in established neighborhoods, that is next to an LRT station or whatnot, or transport hub, these would continue to hold. The demand will continue to hold. We are still a growing nation, and our employment numbers are actually stable also, our employment numbers nationally. Those market, for the domestic market, would actually still hold. The high-end market, because there's more the influence by investments, be it speculative or more conservative investors, as well as foreign buyers. This is where we can see a bit of polarization or differentiation, because those areas which actually has a lot of demand or potential demand, be it for domestic market renters, or even there's the popular thing that people are actually buying for is Airbnb, for example. People still look for those opportunities, and it is still around in the market.
So that's all about in 2024 and how we can actually summarize the whole market situation last year. But looking ahead to 2025, how will perhaps the slower economic growth can actually affect the whole situation, especially when the geopolitical tensions affect the global economic shifts, like you mentioned earlier, and it gives ripple effect on local markets. So my question is, how can stakeholders prepare to navigate these potential obstacles, Sulaiman?
I think investors today are even more prudent than ever before. I think that the lessons learned from how the world actually reacted to the unfortunate global pandemic brought by COVID at that time, it actually wakens up everybody in terms of making sure that whenever you make an investment decision or even a policy decision, how do we mitigate risk? This being said, I think there's a lot more awareness in the market, and we'll actually do a lot of consultation internally as well as with external experts also. And that being said, there's a lot of opportunities, and people know the risk of generalization. People do not take it as a statement, as an overall statement that things are going up or things are going down. There's always opportunities as well as risk that people are actually looking at. So even within the residential market, or even within the office space, which is still linked with the lingering supply supply-demand mismatching in terms of the occupancy rate is still being challenging and whatnot. But there are opportunities even within the commercial market. If we look right now, there's flight to green or flight to quality, where new office spaces with better design, with the ESG elements and compliance matters are actually embedded within the offering, actually generate consistent demand, and these kind of buildings would still be in demand at the expense of the other non-compliant buildings, if you like.
And now let's touch a bit on the financing and also policy environment. In 2024, the overnight policy rate OPR hikes affected loan affordability for the middle income groups. And this year, it is expected by BNM to actually maintain the rates by 3% until the end of the year. So how can you expect the overall market as a whole on affordability towards this middle income group?
I think the call to retain at 3%, meaning that we're not changing the OPR right now, is a good call. Considering the market has grown, and this is not just about the property market per se. This is actually for the overall economy, which includes the property market segment. Of course, we talk about OPR being a key determinant in cost of funds for people to actually make their repayment for the mortgages and whatnot. So retaining that is actually a good call, because we are actually growing. The confidence is actually returning, but we do not want to disrupt that return or the momentum for now. We still need to actually have a accommodative policy like to retain the 3%, and that is even more so with the anticipated impact of removal of subsidies for RON 95, for example, the impact of SST's expansion, as well as the recently being highlighted TMB tariffs. TMB tariffs. So I think the 3% is actually fair for at this level. And if you look on an overall trend, 3% is actually of late a more recent average that has been actually within the market. It is higher than how it was during COVID times. But if we look before that, even the pre-pandemic level, the 3% is where it was.
And one more, will the changes in real property gains tax or RPGT, in 2024 actually helps to boost the secondary property market in 2025, or it will actually lead to more speculative activity?
RPGTs, I guess, into self-tax, self-assessment, and then new plans for RPGT. RPGT is actually a measure to actually curb speculation, but we also need to actually have some level of speculation, where that's where the market activity will actually move up because of with the more optimistic investors coming online. But in terms of RPGT right now, where we actually have in the country, I think it's actually a measure that is not to be enhanced any further. Basically, we shouldn't tighten it. We should actually allow the market to actually grow, so that the confidence for both domestic as well as international confidence is actually strongly returning to the country, as well as allowing buyers or purchasers who actually purchased the property before, local Malaysians, and selling off right now, considering the cost of living and the overall cost of living right now, this is actually one of the ways for them to actually enhance their wealth as a private person.
Speaking of which, about cost of living, affordable housing remains a critical issue. So, in your opinion, Sulaiman, what strategies or policies do you think that we should implement or is essential in 2025 to ensure accessibility in all income levels of rakyat? And what can actually developers do to manage the oversupply of high-rise residential units?
You rightfully put. Affordability remains a key challenge, and this challenge is not just on Malaysian shores alone. It's actually a global issue. Affordability is actually a global issue. But looking to the Malaysian perspective, in addressing the B40s or the M40s, the mass market, all the programs that we actually have in line should actually continually to be supported. But at the same time, we need to actually have a more sustainable long-term strategy. The overall pricing mechanism, I think in terms of the cost of input, the cost of compliance, the development costs, as well as the income level. Affordability is also as important, the role of input costs towards coming up with the pricing. It is also in terms of how affordable it is from the buyer's perspective. How much can they actually afford? So programs to actually inject more affordable houses in the market is to be continued, but at the same time, the control mechanism in terms of new supply coming online, the approval for it, making more prudent decision. I think today city councils, when they actually approve a new development, more questions are being raised and more studies are required to be done, so that a prudent decision is actually made in terms of whether the area requires the number of units, and those prices, are they actually marketable and sellable within the market, to avoid the overhang problem that we are still facing with, although it is actually improving of late. But yeah, those are the long-term strategies that we really need to look at, as well as it must be a multi-stakeholders angle. Be it from the buyer's perspective, from the developer's perspective, regulators' perspective, as well as financiers. The banks actually plays an important role as well to actually help mitigate the situation.
All right, maybe one last question before we end this session. Sulaiman, with the recent establishment of the Johor Singapore Special Economic Zone, JSSEZ, what do you believe will be the most profound and lasting impact on the property market in Johor? And how should investors position themselves to capitalize on these changes? And perhaps a little bit of outlook for this year of property market.
Johor, in the past 2 years, if we look at the number of transactions, how it has actually rebounded, is one of the returning stars, if you like, the returning stars. They were performing very well before, but then they came with the situation of oversupply situation because of the interest was so intense over there, where the market didn't actually, the demand growth didn't actually follow suit. The focus with JSSEZ is to actually spur more interest in investment for actual economic activities. There's all the different regions from Serentak to the rest of the whole it's kind of Malaysia region for the Johor region. We can see that these activities or the investment is expected to come in. Only thing is we need to actually make sure that the alignment of new infrastructures that are actually coming online would actually be suited to the investors that are actually coming in, to actually make sure that they actually have more confidence in the commitment by the government. But that being said, the infrastructure works that was done 20 years ago throughout for the Johor region, it has actually improved a lot of situation. Only now that it's almost like saying that the hardware is pretty much there, although there's still enhancements to be done, is the software that we need to actually improve on, so that's where the investors' confidence will actually come in.
Thank you so much to Sr Sulaiman Saheh, the Director of Research at Rahim & Co International, Senior Berhad, for sharing your insights on Malaysia's property market. And we appreciate your time and expertise in helping us understand the challenges and opportunities in this year, 2025 as well. And you can find this whole conversation and discussion on all of our social media platforms, and that includes astroawani.com. See you next time.